So welcome back to the final session of the International Conference on Inclusive Insurance 2021. It's session 21, What's Next in Inclusive Insurance, Closing and Outlook. So basically it's crystal ball time. Now, before we start, again, very quick, the housekeeping that most of you already know. While others are talking, please mute yourself unless you're speaking. In this session, we have simultaneous interpretation into Spanish. Click on the globe button to select your language. We are recording the session and we'll be making it available on the conference website, on the presentations as well, if you get them. If you have a question, please put it in the Q&A function, not in the chat. That makes it easier for us to watch it. And for any technical issues, please message the MIN executive team. Now, welcome fellow panelists. And before I start, let me just quickly go through some feedback or some of what has been discussed in this year's conference. 2021 was again a challenging year so far, and beyond COVID-19, we're still facing the challenge of climate change. Now, insurance outreach is still very low at many regions in the world, and that was also underlined by the Landscape of Microinsurance Study 2021. But this conference aims at understanding the role of inclusive insurance. Why is it important for sustainable economic development? What are barriers? What can help to increase outreach? What are success factors? What should be avoided? So one of the important, or to me, one of the key lessons learned or interesting lessons learned was from the landscape study. Yes, life and credit was playing an important role in the past, but health is catching up. We've discussed that in many sessions. Women are disproportionately affected by the pandemic. They are less likely to have digital access, and that discussion certainly needs to continue. Also, during the pandemic, enrollment and renewal declined. It highlighted rural vulnerabilities in many cases and the lack of preparedness in many governments. Digitization is speeding up. Use of different technologies can help to solve many of the issues. But also someone said, it's not the silver bullet yet. And there were sessions around human touch. Yes, digitalization is important, but don't lose the contact to the client. One nice quote from one of the session team was, digitalization is also a huge insurance democratizer, so it eases access. In general, pandemic allowed to regroup, rethink, and forced us to rethink how we manage and how we work. And it forced us to become innovative and innovate. And still, despite the pandemic, climate change remains a key challenge. Now, there are numerous to-dos, challenges, opportunities. To-dos like choose the right partners, switch from just selling insurance to selling, someone said, offer life moments. Go to the communities, learn from them, keep counting, and we need better data on where we are and where we stand. Regulation is important. Small countries could think about harmonization regulation. Limit capacity is a problem. Funding needs to be accelerated. We need to invest in more trusted challenges. And trust, as always, remains a challenge. Now, there are some opportunities. There was one session on quick on the certification of index insurance. Digitization, again, is a key opportunity. Social media can help us to spread the word. We have seen an example of how WhatsApp is being used to sell insurance. We need more country, be more inclusive, and accelerate our activities to offer more insurance. Now, I would like to welcome the panel, and I have to start with one unfortunate news because Reshma, former board member of the World Bank and director of the National Treasury from South Africa, cannot join us because she had an unexpected power cut and she simply cannot connect. So she sends her apologies and she really wanted to be with us. I would like to welcome Lorenzo Chan. He is the CEO of Pioneer holding company of Pioneer Insurance Group in the Philippines. He's the chair of the board of the Microinsurance Network, the only nonprofit global multi-stakeholder platform dedicated to promoting inclusive insurance to low-income households worldwide. Armed with over 35 years of experience in both general and life insurance, he championed insurance for the mass and micro markets via simple, affordable, accessible products and innovative distribution partnerships, which contributed to the emergence of retail insurance in the Philippines. And I think not only in the Philippines, Lorenzo, I know him since a few years now, many years now. He's always a good sparring partner. He's member of the steering committee of the conference, and he is not only CEO of Pioneer, but he's a pioneer of an inclusive insurance and a pioneer for many others who look at his experience. So thank you very much for joining our panel here today. I'm very pleased to welcome Tariq Saif. He's Secretary General of the Insurance Federation of Egypt. He's an insurance expert with more than 25 years of experience in the insurance industry as a practitioner, consultant, and trainer. Through his career, he has supported insurance professionals, executives, and board members through conducting insurance courses and seminars in various areas of insurance across the Middle East. Welcome, Tariq. It's a great pleasure to have you here.
Thank you.
I'm really looking forward to that presentation as well. And last but not least, Miguel Solana. He leads the Inclusive Insurance Workstream of UNDP's Insurance and Risk Finance Facility based in Istanbul. Prior to this position, he worked for more than 11 years at ILO's Impact Insurance Facility. He has been in Cairo. He has been in many countries in the world, and many of us know him since many, many years. And now you have one of the key positions in inclusive insurance at this new UNDP Insurance and Risk Finance Facility, where everyone is already excited about, and I'm very much looking forward to hearing more about this. Now, I would like to start with Lorenzo Chan, to invite him to give his views on, what's next? It's crystal ball time. What's next in the inclusive insurance industry? What do we have to expect in the next, let's say, 12 to 24 months or whatever period you think we should look at? The pandemic certainly has been changing a lot. It's hopefully fading out, although I'm not really sure whether this winter it's really fading out, but cross fingers and be positive. And I'm interested in hearing your views on how will the industry evolve over the next few months and years. So I stop sharing my screen and I'll allow you to share yours.
Right. Well, thank you, Dirk. Thank you. And good morning, afternoon, evening to everyone. All right, next slide, please. So Dirk asked us to look into our crystal balls and to predict what might happen. And so I thought I'd start off with some undeniable truths, which is also my section for something old. I think that it's very, very obvious the need for insurance is ever present. I think Dirk mentioned climate change earlier, and we can just only look at the headlines every day. Natural calamities around the world continue. They do not take a break. And so I think this opportunity that they occurring during the pandemic could be considered a wake-up call that will make people realize that crisis and disaster continue to be real possibilities that can be mitigated by insurance. And of course, I think the economic impact brought about by the pandemic, shutdowns, closure of businesses all across the world, the loss of jobs, I think, has aggravated that need. And so it's highlighted the need gap. And of course, a lot of the barriers to inclusive insurance remain. I think it's a trust issue that was cited by Dirk earlier on. So that, goes to the credibility of insurers and the players, the accessibility afforded by the enrollment and claims. So there's still that tug of war between physical and virtual, or tech versus touch. But there is a pandemic, and what has that shown us? And then to all of this, we must add the share of the shrinking wallet of a lot of people. And then I move on, next slide, please, to what I call something new. The sudden shift that's happened because of the pandemic. So there's digitization and changes in processes and structures, that had already been happening prior to the pandemic, but then that it's really accelerated the change. I've always said that a year and a half of the global pandemic must have packed in a decade's worth of disruptions and possibly some success. I think a lot of companies got to do within the year and a half that they couldn't do in over 10 years. There were new habits and then possibly new markets. What do so what are the new habits? Purchase behaviors changed drastically. People who even in the micro sector that wanted face-to-face, brick and mortar, have started to feel that, okay, I can't go out. I mean, virtual must be a way through the mobile. And so that is one. Prioritization of what we buy, clearly from essentials and to now health and hygiene related products. And even in the insurance sector, even in our end, we saw a shift away from diagnosis. Diseases like our dengue insurance was given up, in favor of emergency care. The huge spike in hospice cash sales and products, brought about by this greater awareness. So with daily activities and the way we socialize and interact, where there's no mass gatherings, you see how that has affected people in work. And so with some of our clients, we saw that they had less use of the motorcycle because they were working from home. So they thought, how does that affect my insurance? And yet you have others saying, there's more use of the motorcycle because they're now engaged in delivery services, one of the biggest industries to emerge out of the pandemic. And so, the greater health consciousness has led to a better safety, health, and hygiene concentration. Now, the emergence of the new market also, there's a possible new market that's emerging, gig workers. Now, they've always been around, but we've noticed that the substantive part of people have entered the gig industry, and a lot of them had to do with losing their jobs during the pandemic. And so this is trickle-down effect. They've gotten engaged in food and service deliveries. So, so that this is something worth looking at as a potential, substantive segment of the market. And of course, due to culture, habit, connectivity, infrastructure, people struggled quite a bit during the height of the lockdowns. But now that many markets have slowly opened up, more and more, we see that there's a little reversal to face-to-face, that it is still the preferred mode, because it is where they feel trust can be built. Now, the other present shift has to do with the hybrid approach, blended tech and touch. So virtual, online, but the one lesson that we felt is very necessary. Being virtual, being online also necessitates an offline mode. I keep saying this because connectivity is an issue, and very often you have sudden lockdowns where then that becomes quite an issue. So an offline mode is always necessary. There's an increasing number of payment points that we see through mobile wallets, and this is not just by the telcos, but by MFIs as well as other lending institutions. So let's go on to the next slide, which is post-pandemic, what next? This is my something borrowed, because it should come as no surprise. So it's something old, something new, and now something borrowed, which is a takeoff from a lot of stuff that has happened during the pandemic. So I think that the renewal, we've seen enrollment renewal processes really simplified, for enrollment in a large segment of our market. It's down to 5 to 7 data fields, which is a great improvement. Renewals during lockdowns, because people couldn't do face-to-face, they had to do it via SMS and messenger chat. And for many clients, it was the first time they'd done it. And so the experience of that made it possible. And claims validation, were done now virtually via the mobile, and interviews with claimants were done, again, virtually as well over the mobile. So these will continue as people have experienced the simplicity and the accessibility of such arrangements. Now, Well, how else do we see a mix of tech and touch, though? For some in the market, that initial face-to-face enrollment, that initial face-to-face contact is still very important. So we reckon that that might still happen, but hopefully digital can take over renewals and claims, and that becomes the next norm post-pandemic. E-wallet payments, we say, will continue and will become a new norm, faster claims payment option, and why not? We've also seen, because of the climate change issues and a lot of the other issues that have arisen during the pandemic, there is now a heightened awareness, and so there's demand for new products, none other than business interruption. And whereas there's no product for business interruption due to a pandemic as yet, there has been development in the market now of business interruption for calamity brought about by calamity risks. There is also a perfect opportunity for players to offer better value in terms of coverage amount and or price, even of existing products, because it's a chance to prove to them that we can provide increase in coverage amounts with less or no increase in premiums. So this really adds value to it. I mean, there's a lot of talk about loss ratios, et cetera, et cetera. So this is really one way of adding value in response to that as well. Okay, and so we have, next slide, please. More changes. The risk elements and exposures have changed, as I mentioned, due to a blend of work from home, work in the office. And so the way risks are underwritten and viewed, will alter, will change. I talked about the gig workers, and then there's less use or greater use of motorcycles. That's one way. We also see the influx of a great use of bicycles and demand for some form of insurance for that. Now, any company that has actually gone through the pandemic and seen what has happened, I'd be very surprised if they do not invest in the upgrade of their digital infrastructure. I think they've got to. It's no longer an option, it's a necessity to prepare for the next normal. And even if they wanted to partner with tech companies, they would need to upgrade their own tech infrastructure. And new ways to engage customers really means a hybrid approach that will work slowly towards a more digital approach. But will the digital approach ever replace the personal approach? My crystal ball says never ever fully replace. It's going to be blended, but never fully replace. There's always room for that. And last but not least, I'd like to talk about cash in, cash out agents. We talked about mobile wallets establishing themselves beyond the telcos. And so we've seen and experienced that there is a need for cash in and cash out points for the micro market, for the low income market. They still need that. It's not necessarily brick and mortar. So we're seeing the development, the evolution of a lot of mobile agents, talking, walking agents. Now, because of this, we're seeing thousands of them with some of our partners. This leads to new risks to cover, such as money risks and fidelity cover, fidelity insurance. So that's as far as my crystal ball goes. Back to you, Dirk.
Thank you very much, Lorenzo. I don't want to let you go before we discuss a few questions. One of the comments that really I have in my mind, I mean, it's not new, but someone again said we have to get the insurers interested in entering the low income market or the inclusive insurance market or the micro insurance, however you will call that. Apparently that seems to be difficult, and there are, last year I said we need no more pioneers like Pioneer. How do we get more pioneers like Pioneer? Why were you interested? It's not low-hanging fruit. How can you encourage the insurance industry to enter that? And also, what I strongly believe, we talk about CSR many times, but insurance, the role of insurance is very important for sustainable economic development. If you start a business, you're taking on risks and you need to manage those risks. Why doesn't the insurance industry Why isn't the insurance industry more proud of their role that they have, which is an important role? And they could flag it much more. The role they play for reaching the sustainable sustainable development goals is key. Why isn't that really understood? That is my impression sometimes.
Ah, right, right. No, Dirk, it's a very good question, and I ask that all the time. I ask that all the time. How do you get the industry? How do we get the industry collectively more interested and get into this already? I mean, we've all been talking about it for the last, 10, 15 years, if the conference is anything to go by. I suspect, it goes back to the basics. The industry looks upon this market as low income, small premiums, ergo needs lots of volumes. And then they suspect potentially lots of claims. And because of that, they equate that with hard work, a lot of hard work. And I say work they're not willing to do. And so it often leads to the issue, there is no business case. Or the question is there a business case? I always say, yes, there is a business case, but for it to work, you have to go beyond the business case. No, it isn't CSR because you don't want to just do it once and then and take away. It has to be sustainable, and it can be sustainable. And what can we say to convince people? One, go back to the real cause, the real roots of the foundations of insurance. When it started, well, way back when, in Lloyd's and all that. The origins of insurance are to protect life, to ensure life and protect life and what matters, to ensure continuity of life, to help people rebuild and restart, after they suffer a loss. And insurance companies forget that these days because they only talk about how big they are, how much premiums they have, and the huge volumes they have. They forget to track that one important thing. How many lives have we helped? How many SMEs have we enabled? There's none of that because that's never into the measurements. The measurements have always been, premiums and volume and not that. So those are quite important. Why else go down to this market? Because we are all competing in the AB corporate sector, extremely bloody market, an extremely bloody ocean, a bloody market. And where else can you go? It's saturated up there. There is nowhere to go but down the pyramid, where the market is bigger, broader, the numbers are larger. And you have a blue ocean waiting to be tapped, already partially tapped, but still more needs to be tapped. And so for me, you want a business case? Market share. Work for that. Now, the one lesson that the pandemic has highlighted is that calamities keep happening. Ergo, the need for insurance is ever present. So whether you look at it that way from the angle of what an insurer is supposed to do as a noble profession, or to tie it up with the SDGs of the UN, where no one is supposed to be left behind, there's much work to do, and there's a whole market waiting to be served. There is a business case.
Thank you, Lorenzo, for this very encouraging words. There is something in the Q&A, which I think is a comment, but I just read it so that everyone can see that. From Justina, I agree with Lorenzo's perspective. Maybe microinsurance actors should borrow from the initial development of microfinance. It was supported by many institutions till it became stable. So thank you very much for that comment. And also you mentioned small and medium enterprises, micro and small and medium enterprises. That was the topic that Reshma wanted to cover because they play an important role in emerging economies. Over 30% of the GDP is from micro and small medium enterprises. Their role in creating employment is even higher, and they also play an important role for women that create micro and small and medium enterprises. Unfortunately, we can't cover that topic here. We'll certainly keep that up and discuss that over the next month and maybe at the next conference. And talking about increasing outreach, I'm now turning to Tariq Saif, Secretary General of the Insurance Federation of Egypt. Tariq, we had no session on discussing, on focusing on the Arabic and Islamic world. We discussed how we should call that, but it's Arabic world, it's Islamic countries, it's a broad range of countries. We had no session on takaful insurance. We would like to hear from you about the challenges of inclusive insurance in the Arabic Islamic world as a whole, and what would you see as important steps to increase outreach in those countries? You're on mute.
Sorry.
Thank you.
Thank you. Thank you, Dirk. And let me express my pleasure to be in this very important conference among this array of talented and people and experts to share my ideas about takaful and especially micro takaful in relation to financial inclusion. Actually, I would like to start with the definition. This is the question you asked me in the coffee break. What is exactly the Islamic world? Actually, this definition is a bit confusing, a bit ambiguous, because there are many approaches to define Islamic words. The first one is the constitutional definition. If the constitution of the country stating that this country is Islamic one, it would be. This is actually very misleading because, ironically, we will exclude the Saudi Arabia because they don't have written constitution, for example. The second approach is the demographical. What is the percentage of Muslim people in the country? If the country has a majority of Muslim people, like Nigeria, for example. The third one is the membership of the Organization of Islamic Cooperation, and again, we may exclude India. India has the largest number of Muslim people over the world. So actually, we'll go for the de facto or practical approach. We have Muslim communities in many countries over the world, and these people, they have some special needs because they have some special preferences. So this is what I'm going to say, that the takaful and the micro takaful is a product aim to mimic the main conventional insurance through Islamic process. What does it mean, Islamic process? It's a Sharia compliant process. Sharia means Islamic jurisprudence, the Islamic law. So simply, I will get back to this slides later, but just to explain the concept. This piece of stake, is it prohibited or allowed from Islamic point of view? This is a very difficult question to answer. It might be halal, allowed, or haram, prohibited. Based on what? Based on the process of slaughtering the animal. So if the animal gets slaughtered according to Sharia or to the Islamic jurisprudence, this piece of steak will be allowed. Otherwise, it will be prohibited. So from my point of view and from Sharia scholar point of view, there is no problem with the insurance concept itself. Insurance concept itself is accepted in Islamic law. But the process to deliver the main product or the main protection under insurance contract must be Sharia compliant, must be Islamic law compliant. This is the main concept, the core concept of the takaful. Nothing new. We will have insurance policy, we will have risks covered, risks excluded, claim, indemnity, benefit. Everything is, we are mimicking the conventional insurance product, but through a process accepted by Islamic law. Getting back to the order of slides, actually the definition of socially marginalized or financially marginalized people, usually we define the socially or financially marginalized people as the people, they have lack of financial resources. They don't have access to the financial system. This definition is very good, but is not completed actually, because we have other segment of people. Yes, they have lack of financial resources, may have lack of financial resources, may don't have access to the financial system, but they have additional dimension to be taken into consideration, that they have religious preferences. They have something telling them that insurance in this way is prohibited, and a new process to deliver insurance cover must be there. This segment is a targeted segment for takaful and equally micro takaful. So if we have people have access to the financial system, have financial resources, but they have some religious preferences, they will be ideal client for takaful. If they don't have access to the financial service sector, they have lack of financial resources in addition to religious preference, they will be targeted client or ideal client for a micro takaful. So the difference between takaful and the micro takaful simply is the same difference between insurance and the micro insurance in terms of targeting segments. So what is the main problem? Seeing the situation in Islamic world or Islamic population, we can see many challenges and opportunities as well. Plus 50% of the poorest people in the world, they live in Islamic world. So this is a challenge, how to access these people, how to reach these people. But again, it's opportunity because there is insurance gap can be filled by the insurance sector or by the insurance companies. Every 1 in 5 Muslim lives in extreme and chronic poverty. So again, we need to fill this gap. Takaful is growing industry despite some problem in the previous year. Some takaful reinsurer, they shut down, they get withdrawn from the market. But at the end of the day, takaful is growing. They have a good growth rate, and the expected growth rate, accumulated growth rate for from 2021 to 2026 is about 11%. In terms of population, there is a great opportunity. Why? Because Muslim people presenting 25% of the world population. So we have a huge market to be served through takaful and micro takaful as well. So if we assume that 50% of the poorest people in the world are Muslims, and 20% of the world population are Muslims, so we have a huge, statistically speaking, we have huge market to be served, targeted by providing takaful products. The takaful dynasty, it means that takaful premium per capita in Islamic world is extremely low. So this is a great opportunity to work on the takaful. What are the main problems on the demand and supply sides? On the demand side, like microinsurance, we have unemployment, higher rate of unemployment, or people working in informal economy. So it's very difficult to identify the need. It's very difficult to reach. Poor skills, especially in IT. So if we talk about the digitalization and digital transformation as an arm or as a tool for achieving financial inclusion, we are facing a problem that these people, they don't have the proper skills to deal with IT. Definitely low income, poor housing, high dependency rate, especially in rural areas, poor health condition, high crime rate. That all these characteristics are common between poor people in Muslim and non-Muslim countries, in Muslim and non-Muslim communities. In Muslim communities also we have additional characteristic. It's a bit problematic that they have religious preferences. So if we look at the supply side, insurance companies usually applying a cherry-picking underwriting strategy. They are very selective. They would like to have a first-class risk. And everyone knows that insurance and the reinsurer insist to have a grading for risk. This is very accepted from technical point of view. But at the end of the day, if you would like to serve the unserved people, the poor people, you have to tailor a customized, a bespoke underwriting strategy to be able to absorb this these types of risk, because we are going to cover poor people, you have to expect that the fire, for example, in property, firefighting is not good as the big industrial and the commercial clients. The second issue, that insurance company, as any profit maximizer, they will go to calculate the opportunity cost of capital. Is it better to allocate my capital to micro insurance or to micro takaful, or to put it in a more remunerative commercial operation to cover commercial risks or complex industrial or marine insurance or hull insurance, which is better? So the last one is, it is from, again, takaful and the micro takaful perspective, that they have to develop a Sharia compliant product. So this is a big challenge, because many, actually, to be very honest, many takaful companies, they try to copy and paste the conventional products without taking into consideration the needs and the nature, the needs of the client and the nature of the takaful market. So this is basically the main characteristics, problems, challenges, and also opportunities on the demand and supply sides as well. Simply, why takaful? Why some people, some Muslim people, they consider takaful as prohibited, as haram, not allowed? According to Sharia scholar, there is some major objection against takaful. By the way, I'm not getting ideological. I served most of my career in conventional insurance companies, by the way. But I'm stating fact that there is many people, they considered insurance as prohibited, as haram. They said that riba. What is riba? Usury. Usury means interest, and in Islamic jurisprudence means exchanging unequal amounts of money, premium and claim. Premium might be less, might be higher. Ideally, it's less than the claim. So exchanging unequal amounts of money is not accepted by Sharia between two different parts under any bilateral contract. So there is gharar. What is gharar? Ambiguity, because we pay the premium, but we don't know exactly, we don't know if we are going to get claim, to get indemnified or not. Even in life insurance assurance policy, sometimes we are sure that we will get the benefit under the policy, but also there is ambiguity relating to the timing, not to the amount. Anyway, there is gambling. This is a bit weak argument. Even the Sharia scholar are not agree on it. There are some minor objections. What is the difference between major and minor objection? Major objections are inherited in the insurance itself, in the conventional insurance process itself. Minor insurance are related to the company guideline. For example, in Islamic law, Islamic jurisprudence, there is a clear rules for inheritance called the mirath. Inheritance law sometimes breached by the life insurance policy. So in this case, you have to make the guideline matching the inheritance law of Islam when we distribute the life insurance benefit on the beneficiaries of the policy. Okay. Also, few Sharia scholars, they considered that there is some deceptive or exploitation in creating a high or unjustified profits by insurance companies. But anyway, the minor objection might be different from company to another, from market to another. The most important are the major objections. So what is the solution to target and to reach this segment of the client? They do believe that insurance is prohibited, is haram from Islamic point of view. Simply is the takaful. What is takaful? Actually, mutual insurance is accepted from Sharia point of view, because there is no gharar, there is no ambiguity. If there is deficit, all participant in the mutual insurance fund, they are responsible to make good the deficit. And if there is surplus, they are entitled to get the surplus. So the concept of mutual insurance is accepted by Islamic jurisprudence, by Sharia scholar in Islam. But as you know, in the modern economy, it's difficult to run a pure mutual insurance fund. We need management. We need seasoned people to manage the claims, to manage underwriting, to manage actuarial aspects, to manage the relationship with the regulator, to make accounting, to make reinsurance. So the takaful model is based on a full segregation between shareholders and policyholders. Policyholders are mutually insured by creating a mutual fund. Insurance company, takaful operator is not an insurance company, is not a risk carrier. Takaful operator is a portfolio manager, managing the portfolio for the benefit of policyholders and on behalf of policyholders. For what? Definitely not for free. They get some remuneration. So there are different models to govern contracts or models to govern the relationship between takaful operator as a portfolio manager, not as a risk carrier, and policy holder as a mutual insurance fund. So any deficit in claims, any deficit in fund, if the claims exceeds the premium collected, the policyholders, not the insurance company, will be responsible to make good, to finance any deficit. And if any surplus, they will be entitled to share the surplus between the policyholders. So insurance company, takaful operator, wearing two hats, investment manager and insurance portfolio manager, as simple as that. They are not risk carrier. So we have many modus operandi. We have many business models to govern it. This is one of the main problems in takaful, that there is no standardization. There is a chaos in business models. Diversity is always good, but lack of standardization in a new industry like takaful, from my point of view, it's not a good characteristic or good feature. We have basic mutual model. This is applied in Sudan for long time. The pure wakala model applied in some takaful companies in Saudi Arabia. Modified wakala model applied in Saudi Arabia and in Egypt as well. Pure mudaraba model, this is the Malaysian model. The wakala mudaraba or hybrid model, now this is the most common model over the world, and waqf model. This is very rare to be used. There are two takaful operator running operation based on waqf model in South Africa and in India. So simply, this is one of the takaful models. The policyholder, quickly, I will go through quickly just to explain what is the concept. This is the hybrid model, wakala and the mudaraba. Insurance company work as a wakil. What does it mean, wakil? Agent. It's an agency contract. So the policyholder, they pay the premium to the fund, to the policyholder fund. Insurance company as a wakil or as an agent, they get upfront wakala fees, agency fees, to cover the management expenses of the company, of the takaful operator. Then they manage the risk, they manage the mutual insurance pool on behalf of policyholders to pay claims, to arrange for reinsurance, paying reserving, paying operational expenses, and any surplus is to be invested. At the end of the year, the investment surplus will be shared based on a predefined shares between a takaful operator and policyholders. So that what is the legal possession of the takaful operator here is an agent, wakil, to manage the insurance portfolio, and mudarib. What does it mean, mudarib? Is a profit sharing contract. As a profit sharing contract to invest the money or the investment during the year. So the full operator is entitled to get two types of remuneration: wakala fees for managing insurance and profit sharing for managing expenses. Again, if there is any surplus in underwriting results, this is owned by policyholder, not the careful operator. And if there is any deficit, this is to be paid back or to make good by the policyholder themselves. So getting to the microinsurance, what is microinsurance? Microinsurance, according to the microinsurance network, can be defined in different three dimensions: product itself, a product with a low level of sum insured, a thin premium, affordable premium, can be defined as a characteristic of the targeted group: poor people, people under the poverty line, people are financially marginalized, or can be defined in terms of process. And we have a special process, very simplified process to deliver insurance to this marginalized segment. To create micro takaful or micro insurance operation, we need to raise awareness and education. Definitely, for micro takaful, we need some religious briefing to explain what is the difference between micro insurance and the micro takaful, to convince people that micro takaful is a Sharia compliant and that micro takaful is halal, can be bought by the Muslim people. Improving access, this is, I think, covered by many papers in this esteemed conference and many researchers, and promoting affordable insurance premium. So this is applied equally on micro insurance and the micro takaful, but the first step should be customized to reflect the Islamic jurisprudence or Sharia rules or Islamic commercial law. Actually, in financial inclusion, we know that the first step is to have bank account, current saving bank account, to be able to pay. The main component of the Islamic financial system are Islamic banking, takaful, Islamic capital market, and the Islamic money market. About micro takaful, we have nothing to do with Islamic capital market and Islamic money market. This is for rich people, actually. For poor people, we need to make some synergistic approach between Islamic banking and takaful companies. Why? Because again, the first step in financial inclusion is to have ability to pay, to have access to the financial system. Simply, if we don't have account, you will not be able to buy insurance. From my point of view, I have a study in this issue that now we have what is called post assurance, like bank assurance. Post authorities over the world, they provide many micro insurance products, and they can play equal role in providing micro takaful insurance. There are very good experience and best practices in Kenya, in Zambia, in India, in many countries, to link the financial services of post authorities with micro insurance product. So we can equally do the same for micro takaful. Why? Because post offices, they have a very high trust in rural area. They don't have a complicated compliance system to ask people from where you get the money. They don't need a high formality to open an account, and so on. So micro takaful distribution, actually over the world, there are two models now. The first model is full service model. That's the takaful operator develop their own product with an affordable premium and start marketing. From my point of view, this model is a bit difficult because many insurance companies, they don't have the experience how to reach rural and marginalized areas. So the first one is the partnership model, is to create partnership with one of the micro Islamic finance organization or institution with post office or with any arm can easily reach this segment of the client. What are the main challenges and drivers for the future? From my point of view, you have to have innovative product for scale selling, because so far most of micro takaful products are about funeral expenses. Still, we don't have any innovative product. We have a lot of things to do in this area. With affordable premium, a plain vanilla product, we don't have a sophisticated, complicated product and should be Sharia compliant. And this is, again, big challenges because there is some problematic features in the takaful industry today. The first one, the gap between theory and the practice. Well, this is very much related to the lack of qualified people, because most of takaful experts coming with a conventional background. So they don't fully understand the concept. They try to apply the same, to mimic the same policies, the same products in takaful operation. Lack of standardization. Definitely IOFI and IFSP. IOFI is the accounting and auditing organization for Islamic financial institution based in Bahrain. And IFSP is Islamic Financial Service Board based in Malaysia. They playing a very important and crucial role in setting a standard for the takaful. And recently IFSB, they issued a report to deal with micro takaful and how to govern micro takaful, main challenges, main operational framework. But honestly speaking, we still far behind the required level of standardization and understanding of the industry, developing unique distribution channel and positioning. Again, what does it mean, positioning, in this context? Actually, takaful is not a religious product. Takaful can be bought by non-Muslim people, as halal meat can be eaten by non-Muslim people. There is no problem. So many insurance companies or takaful companies, they try to promote takaful as a religious product. Even they put a dome, they put a mosque on their advertising material, or rosary, or praying mat. I don't know why. Takaful is just a Sharia compliant, can be accepted from Islamic point of view, like the animal slaughtering according to Sharia, but anyone can use it. So even the positioning of the product in the market is not properly handled. Because if we put the right positioning for the product, this is will create more and high demand. And this is, as everyone know in insurance company, may achieve a larger portfolio, may make the operation easier, more economical, and more profitable. This is what I'm trying to say. Thank you, and I'm open for any question.
Thank you so much, Tariq. That was a very interesting presentation. I also read from the comments that was shedding light on a new world for many of us. And also also thank you for elegantly answering already some of the questions that came up in the Q&A. Now, I do have one question for you before we move on to Miguel. The COP26 is already starts next week. We have the Insure Resilience Global Partnership Forum taking place yesterday and today. So climate risk is one of the key topics that is being discussed, with the increasing number of climate-related disasters, increasing severity. To what extent is that a topic in the Islamic world? I know that already you were talking about gambling, that insurance is being seen as gambling. I heard that sometimes even in the regular insurance world, index-based insurance has to be accounted for differently because some jurisdictions don't accept that as insurance, which has nothing to do with takaful. So do you see any thinking about how to deal with climate risks also in relation to TACAFO?
I don't think it's against the Islamic jurisprudence at all, because it's natural phenomenon. If we have insurance product based on the Sharia process or Islamic jurisprudence, it will be widely accepted. I think there is a high need for that, because you know that in agriculture insurance and even aquaculture insurance are basically for poor people. Many poor people, they work on agriculture and in fishing and in aquaculture activities. So there is demand, there is need or potential demand. If the takaful companies or micro takaful companies takes a step proactively to develop such a product, I think it will fly.
Okay, thank you. I would just like to read one. It's actually a comment from the Q&A because the rest can't read it. Someone, I can't see the name, it's only a number, says that we would need a standardized course in takaful insurance that meets standards of Sharia and Islamic principles, because there are so many different approaches apparently. So that's another idea. So thank you very much, Tarek, for this input. And I would like to invite Miguel Solana now to the floor. Now, Miguel, we saw the launch of UNDP's insurance and risk finance facilities some weeks ago, which certainly is a major important step. We heard that climate change is one of the key priorities, and we hear a lot about disaster risk finance and climate risk management. But how does that actually reach individual people? And how can we strengthen national inclusion insurance agendas on the country level? So since the UNDP is active in many, many countries, I would hope that you can answer maybe some of those questions and take us in the journey of the UNDP and their next steps in that facility.
Yeah. Thank you very much, Dirk. First of all, in name of UNDP, I would like to thank both the Microinsurance Network and the Munich Re Foundation for organizing the agenda. I guess this has been, for all of us, 5 very intense days where we have all been learning. So I guess this is sort of really the last push for many of us. So thank you for your patience for this last minutes. I will try to be very brief. And yes, maybe next slide. Just very briefly, I mean, as Dirk said, I just want to do a quick introduction to UNDP, to the United Nations Development Program, which is the development agency of the UN, the direct implementation arm of the UN. And pretty much the UN is like the organization that works hand in hand with the countries to achieve the sustainable development goals. What does this mean? This means that UNDP doesn't work from New York, but it works from the country offices where we have 170 country offices and offices in territories, where we pretty much link directly to national governments to set up the national development agendas and to work hand in hand with them to achieve all the different elements of the development agenda. We, as the Insurance and Risk Finance Facility, as Dirk said, on the 25th of September, we were launched. And this meant that this is the first time that UNDP is officially directly engaging in the insurance and risk finance world. Up until now, it had been maybe isolated efforts from our country offices, but never through a central coordinated approach to try to have a common agenda and approach to work on the subject. So I think this is sort of quite interesting, sort of internally, but I think also it has sort of some external repercussions. And pretty much, I mean, our mandate is to try to bring insurance and risk finance products to the vulnerable and communities around the world. This means that we want to bring on one side products, but we want to also work on the transformation of the insurance markets and how can we see them more inclusive and reaching out to new market segments. Just as a very brief sort of resume of what are the areas where we're working. First of all, and it's a very important one for us, I mean, we're working on integrating insurance to national development frameworks. I will be talking about that a little bit later. It's going to be around inclusive insurance, which is the subject that I'm leading and what I'm going to be talking a little bit about in the coming minutes. Then there's the sovereign risk finance. There is a natural capital, which is also, I mean, just for the interest of everyone, is we're also trying to think like, how can we insure something that we could call natural assets? We need to start also insuring nature, because nature is something that is disappearing. And if certain natural assets disappeared in the world, humanity is also losing. And then the last stream where we're working is the insurance and investment, which is thinking about how can we work with the insurance industry to think about its investment capacity. Insurance reserves are a huge asset manager that can create impacts towards achieving the sustainable development goals. And we really want to also have a look at that. So out of these 5 work streams, maybe I will focus on the first 2, because this is really a little bit about the national agendas. And then we can move to the next slide, please. And the first step that we have been doing is around how can we do this within UNDP? And the first element is, as I said, UNDP works on the ground, works through its country offices. And what we have seen is that there was no internal capacity on our colleagues on the ground understanding insurance and how insurance can be integrated into development. So we are starting by building this initial idea around their understanding of insurance. First of all, so that we can better integrate insurance into local development initiatives. This means they have constant conversations with all different kinds of line ministries, setting agendas and so on. And we want to be able to plant a seed that allows us to always bring insurance to all these different conversations. Then it's also around this programmatic approach to mainstream insurance as a tool to work with national governments. And then also from our side, it is these people at the country offices that will be implementing our work at the country level. And we see that this is extremely interesting of having local teams that will be leading this kind of work. Maybe we can move to the next slide. And maybe lots of people have been asking also, what is UNDP doing now at the country level? First of all, we have been kicking off some diagnostic work on all 5 streams of our work. We are very clear in terms of inclusive insurance. It's not the first time that this is done, but the fact that we are a relative recent player on the ground. I mean, we really want to capture the past and current work of players and partners that have been working on inclusive insurance on the ground. And this we want to do in the 20-something countries where we're working in order to be able to grasp and not repeat or try to reinvent the wheel on different elements. And with all these different inputs from this diagnostic, with this understanding that it is based on what other people have done in the past, we want to set up our future work plan for activities on the ground. Then the next element where we're working is focusing on partnerships. We know one of the UN mandates, and I mean, impact and greatly based on the structure of the SDGs, is that we want to convene as a natural role of UNDP the different players that have a stake, like that are stakeholders or have an interest of working on this, and bring them to work together and be able to coordinate what is happening in order to build the experience and use the existing local capacity of organizations and also of different elements on the ecosystem. So for us, it's an extremely important element, this idea about being conveners of the different players. I think the other element that we're seeing is that sometimes we can convene at the national level, which is very important. But what we're seeing in some markets is that we are also being able to convene global players to come and deliver certain technical expertise, provide certain services that don't exist at the national level, but that we can sort of really bring them to this national market. So I think it's a national convening, but it's also being able to have an eye and experience on the global platforms that exist and being able to narrow them down to the country needs. Then it's an element that I have talked about, but that for us is extremely important, is how can we build the capacity of governments and public programs to understand insurance and integrate it to their objectives. And this is extremely interesting because what we see, we see it from our country offices, but we also see that in our public sector counterparties, they sometimes don't understand how insurance works. and how insurance can be integrated to the work that they're doing. So this is also becoming a crucial part of our work in really building the capacity of governments, of public sector, maybe in other ministries that we're not usually used to deal with, but really trying to build our capacity to understand insurance. And then last part of the work is really that we want to work on in terms of outreach, and we want to build on the results that this Resilience Global Partnership is sort of aiming to achieve. And I think part of the conference is like one of our key concerns it's around, and this is a constant topic on the conference, is how can we provide client value while addressing the client's needs. So this is so far how the work is shaping at this level. And then maybe we can go to my last slide, where what we're trying to do actually to influence the inclusive insurance agenda is on one front to, I would say, for me, the objective is really to create incentives at all these different levels. And this relates greatly to the question that Dirk asked to Lorenzo, like how can we get the insurance industry interested in the subject? And we see it actually twofold. One is in something that we're calling the market transformation. And that is really based, I think, in this kind of element of local and global collaborations and partnerships that we can bring together in order to work in different elements. And I will name just a few, and some of the ones where we're already working and trying to build sort of different elements that will be leading this work, which is a little bit about trying to lead enabling regulation, where we work directly with insurance regulators on the ground. It is a little bit around we're calling like an expert guide, which is a lot about thinking, how can we create the answers for insurance practitioners to be able to design, operate, and deliver inclusive insurance programs. We're thinking about big data and artificial intelligence. How can we be thinking about understanding data, making sense of it, and applying it to make insurance more inclusive? It is around building the capacity of the industry, understanding that sometimes there is a political element on trying to get into the business, and the other one is like whether you know or not how to get into this new market, whether you know how to understand the clients, how to understand the distribution elements, how to understand the designing products for this market, and so on. And so we really want to work on this. We want to work on elements like insurance education, consumer protection. This is a little bit of the different elements where we don't see that it's work with one partner, but it's element of integrating different partners. And that it takes a little bit convening all these different partners to align their different strategies or their inputs into a common way of transforming the market. And this includes insurance association, consumer protection agencies, insurance regulators, financial inclusion programs, the insurance industry itself, consulting markets, all these different actors that are working on that. And how can we make a better work to integrate all the work that they're doing? So we really want to do this at the market transformation level, but then we also understand that there is an element that has been mentioned. How do we really get our hands on the ground to be able to work directly with insurance partners to be able to launch initiatives that achieve scale? And in this case, we are trying to work not only through our country offices, but also we are exploring different partnerships with partners that could be implementing also initiatives with us directly with the insurance industry in order to launch, to create, I would say, two elements. I mean, one would be the technical assistance needed sometimes to design and launch this kind of programs. And the other one would be the financial resources needed behind them. And in terms of this, I am calling it in solutions. I mean, because it's not a product to the market, it's a full solution from the product design all the way to execution and how it is brought into the market to the final beneficiary, where we want to have some clear elements of the work that we want to do, which is about pro-poor and human-centric, where we, and it has been mentioned, and I think it also comes in face of the COVID-19 pandemic, around like the digital transformation and how this initiatives need to be data driven. I think we have no choice but to be looking at this kind of solutions. The other element is about gender mainstreaming. Derek also said that in the conclusions about the lessons from the conference around the importance of bringing this gender element forward in the work that we're doing. And the last element of all the initiatives that we plan to support is around driving scale. It is like, we cannot afford anymore around like the small program that is testing some ideas. We need to think bigger and think around how can we scale up what either exists, or how can we create programs that can easily scale up on the ground. So if we see around this idea of driving national inclusive insurance agendas, I would say it's around this idea of transforming markets while linking a direct engagement with the industry to be able to apply all these lessons and all these things that we are trying to, let's say, release and free up in the markets with concrete examples that try to provide, I would say, this new protection and needed protection by the final beneficiaries that we're trying to target with. So if I wrap up my very small intervention, for me, it's around like, from UNDP, we are really trying to think how we can drive the integration of insurance into the development agenda. How can we make sure that insurance achieves its objective to help towards the sustainable development goals? We want to do this by learning from past lessons, by the interventions from all of us in the past, and by integrating them into our strategies and work plans. We want to do this by partnerships. It is not UNDP on its own, is by convening the different actors that exist, creating coordination mechanisms. It's not about substituting what exists. And then again, it's around for us trying to create, transform the markets and how they're operating, and really trying to engage directly with the insurance industry by trying to launch initiatives that could shed some light on how we can do things better. So from my side, I guess that's everything. I am excited from the UNDP side. We have just been launched, but our feet are getting on the ground, and we hope that next year we will be able to start sharing some of the results of this approach and our joint work with all these different organizations that we are looking forward to working with. Thank you so much.
Well, thank you so much, Miguel. And I would like to read one comment here in the chat saying, okay, now the chat has disappeared. In my humble opinion, UNDP's IRFF has nailed the approach to close the insurance gap. Thank you for sharing the information and vision. And that brings me to my question. Now, UNDP sits on the insurance table, and UNDP wasn't known for being insurance experts. Why now? Why not 10 years ago or 15 years ago?
Yeah, and I think you're right. UNDP hadn't explored the potential of insurance. I think there have been different elements that have been extremely interesting. I think on one side, we have UNDP integrating itself into the Insurance Development Forum on one side, sort of being an active development player. And I think this relationship that was created through the Insurance Development Forum, and I can see that the money only came now, and it's true. The money only came now because this involvement with the Insurance Development Forum has been one element that created a little bit an internal thinking around, like, can we actually make insurance a key element of our strategy of integrating key elements in the development agenda to all the work that we're doing in all countries. And this became the teaser, I would say, that sort of created, I think, the political and technical willingness to be able to work on the subject, and being able to think, how could we do that internally? So I would say there's several elements. We are a late arrival into the agenda, but actually we see that that insurance provides a great tool for a lot of the work that is already going on the ground. We work on enterprise development on the ground. We work on social inclusion. We work on all these different programs, from cash transfers for strengthening the capacities of governments and so on. And insurance is a tool that can better help to manage risks on the ground. And risk management is actually, towards the future agenda of the organization, one of the key elements in face of climate change, in face of increased risk that we're facing, due to national security issues, due to uncertainties on markets and so on. And when it's not the full solution of the risk management element, but insurance will be becoming one, I would say, like cross-cutting element into the way that programs are defined and set up within the organization. So actually integrating ourselves into this is a great opportunity for the organization to learn from what has been done and to really try to apply it into our programming and into our planning, and also to bring it down to the work of our country offices and be active players at the country level on delivering the inclusive insurance agenda.
Yeah, thank you, Miguel. And maybe putting it the other way around, maybe we as insurance industry haven't really flagged how important insurance is for sustainable economic development. So it's also, we could have done a better job in flagging our role also in the countries where UNDP is active. So thank you very much. One last question to you, and looking at the time, just a very quick answer, please, if that's possible. What are the coordination mechanisms on the ground, if there are any already? If not, it's a quick answer.
Yeah, it will be through our country offices. Our country office will be engaging, are already starting to engage to existing bodies and coordination mechanisms that exist. Throughout a diagnostic exercise, it has been the first process. So what we will see is that we will be doing announcements at the country level, first of all, on how will we be working, adapting ourselves to whatever already exists in the different countries where we will be active. I think this is important. I think every country where we will be active through a tripartite agreement, we will not try to recreate the wheel on how the market is working, but we will really sort of understand how markets are working, and then we will sort of see fit how we best can sort of engage with the existing mechanism. So I think in these countries it will be clear, and then we will be having some regional and global initiatives that we will be doing maybe more open announcements through the expected channels.
Okay, thank you. One question from the Q&A goes to you, Tarek, asking about whether Takaful is in competition with regular insurance. How do you see that? I see it sometimes even the other way around. My experience was that in many Islamic countries, there was hardly any Takaful, but there was only regular insurance.
Yeah, actually, again, if the Takaful companies succeed to right position the Takaful product and to promote it as not as a religious product, it will be in competition with conventional insurance. I think Takaful has some benefits and features exceeding the conventional insurance if conducted in a right way, because to be very clear, and if conducted in a right way, because it's like mutual, they offer surplus at the end of the year. But the other, if you flip the coin, there is deficit. So if the Takaful company operates the Takaful operation properly, technically, in a sound way, they may compete with the conventional insurance with the advantage of giving a surplus at the end of the year. Because this is like mutual, but the main constraint or obstacle in mutual that there is no professional management. Mutual is usually a small operation. They don't have a professional management. So if we overcome these problems, Takaful will be able to compete. And let me echo Lorenzo that it might be a blue ocean with uncontested zone in some countries.
Thank you. And talking about Lorenzo, there's one question that goes to you. That is around providing capital for inclusive insurance. The big question, how to generate resources for investments, not costs. In the low-income market, do you share available resources or do you set up new ones? It will be good to hear your thoughts on that. So the question is, you just take a slice from the existing capital? That's how I understand it. Or do you get new capital from somewhere? And maybe that's also something UNDP should listen to. If capital is a bottleneck, then maybe we need more capital for microinsurance, inclusive insurance companies. What's your thought on that, Lorenzo?
Sharing, I think the share is helpful. I think, and more importantly than that, it is to get board support and for it. It doesn't, it's a board endorsement or board support. As it is, any new initiative is going to be very challenging. And so if you're going to work from the ground up, I mean, especially for inclusive insurance, there's very little chance that's going to take off. So you go to the top, start from the top, get them to approve it, get them to support it, and test it, test the model. And that would work. I think we did do it. If I can just share shortly our own experience, I think we had it okay. I mean, the capital wasn't too much, and then we had little gains, but nothing superb. And until we had Typhoon Haiyan, and just did it. I mean, Typhoon Haiyan did it for us. It was tons of claims. We went into the red, and then we were summoned. People like me were summoned, by the chair and said, "Did you see these numbers?" And quickly I said, "Oh, yes." And cheekily I smiled and said, "We not only saw them, we made them, we created them." Well, he didn't laugh. He does a smile, and he says, "What are you going to do about them?" And my answer was, at the time, because I wasn't sure if I was going to lose my job, I said, "I would like to think you would want us to continue paying claims." There was a big pause. And then he nodded and said, "Yes, that is what we should do." And that's what we did. And then I said, "Yes." And then we will review, we will adjust as need be, et cetera, et cetera. And we did. And even towards the latter part, when we got into a JV, Dirk, it wasn't saddling the JV with all the attendant costs, because it had enough challenges with the setup costs. No? So both partners did, in fact, subsidize on their own. They did offer services for the JV without charging it, until the JV could get up on its own, could learn to walk and talk. And then today it's existing on its own independently. So yes, the answer is share.
Thank you so much. Yeah. So again, getting the insurance industry engaged, getting the decision makers engaged is really key. And maybe starting with you, Miguel, and that's a bit of an unexpected question probably, but you're working in this industry for quite some time. You've seen the development over the years. Now we're going through the pandemic. Where do you see the industry in 5 years? And I would like to ask the same question to Tarek and Lorenzo to wrap up the session a little bit, because we are soon coming to an end.
Maybe get started. Yeah, I think it's a great question, because I think when I decided to come to UNDP to work on this again, I had to ask myself that. And I think I see that the industry has a great challenge to reach out to millions of people that have not had the chance to experience insurance, that have not had the opportunity to understand how it works or the benefits that it could bring them. And I think that I see is that the insurance industry has an opportunity through the digital sort of breakthrough that it's going on right now in the general economy. I think there's a lot more interest on public policymakers on how to use insurance to achieve public policy objectives. So I think that is a great thing. And I think there's a great push also for certain levels of the industry to see if they can put together parts of the puzzle to push this forward. So I hope that we will be able to use technology to reach out to people that have been so far not included in our strategies, and that we will be able also to have a better approach to reach out to women, which I think it's a very clear opportunity for the industry, missed opportunity so far, and what there's a clear way forward on doing that. So I hope that we can really use technology to go to test new ideas and to be able to reach out to this.
Lorenzo, do you?
I do. Despite my frustrations very often, I hold out high hopes that in 5 years, I'm inspired by the fact that in the last 10 years, quite a number of players have decided to throw their hat in the ring and make an attempt at doing inclusive insurance and offering it for a variety of reasons. So I fervently hope that is going to continue to attract more. And for all those players still waiting on the sidelines asking, is there a business case? Is there a business case? We will now have quite a bundle of proof to say that, yes, there are business cases all over the world. And when that happens in 5 years' time, I would like to see that insurance becomes a product that is going to be bought rather than sold. And we would have arrived. And a lot of us would have done our parts.
Thank you, Lorenzo. So switching from insurance that has to be sold to insurance that where people wake up in the morning and say, am I covered? What do I need? Great, thank you. And now the last word or the last comment goes to you, Tariq.
Yeah. To make the long story very short, more digitalization, more customer re-engagement to the industry. From my point of view, very challenging position for insurance broker, especially in personal lines.
Thank you. Thank you so much. Now, thanks to all of you for being with us. Thank you, Lorenzo. It's been a very interesting panel for me, and thank you for taking the time to be here. And now it is thank you time, and I would like to thank a number of people, and I would like to start with the organizations who supported this conference. So we have all our content partners, organizations that supported the conference, also Jamaica. Thanks to all of you. Thank you to the steering committee members for putting the content together and really making this conference possible. I would also like to thank the around 1,500 people who registered for this conference from around 121 countries, to the over 90 speakers. Big thank you. You're the core of this conference. And before Gilles asks that question, we had 45% of female registrations. More than 50% of the sessions were facilitated by women, and 34% of the speakers were female. So I think diversity matters, and we will continue several topics that came up during this conference over the next month and years. And that's an important task to do so. A big thank you goes to Catherine Pulvermacher and the team of the Microinsurance Network, Asia, Hugo, Aiste, Noelia, Nicholas, Gemma, Mark. I hope I didn't forget anyone. Apologies if I did. Thank you for doing a terrific job in hosting the conference technically. There were so many people in the back making sure that this conference can actually take place. And that also leads me to thanking the entire team of the Munich Re Foundation, the head of the Munich Re Foundation, Renate Bleich, Kirsten Bartel for this technical support, and especially Julia and Bettina for working in the background and make all the websites and uploadings and so on. I would like to thank the Insurance Association of Jamaica for hosting the Jamaican Perspective Day, which I think was a great success. It was a hybrid combined event where we had the honor to have the Minister of Finance opening that, and he announced that there will be a microinsurance bill submitted to the Parliament before the end of this fiscal year. I think that already is success. Now we'll summarize the conference. We will do a summary and we'll write the conference report. So I would like to thank Zaid Kesri and the entire rapporteur team, Maria, Venetia, Jose Miguel, and Pedro, for spending long hours on writing the summaries that will be really important to put the conference together. Again, a big thank you to the steering committee members. I have to repeat that it's a lot of work to review all the proposals and to put the sessions together. Without your support, that wouldn't be possible. Thank you so much. You're really the foundation of this conference and just extremely important to make this possible. Now, I can't let you go again here to have a look at all the speakers, over 90 speakers and there's still some empty dots, which is this session. So I'm still amazed, and I'm always amazed by the time zones we covered, by the enthusiasm the speakers had, by the time they spent. So that is those who provide the content, and it's extremely important. So big thank you to the speakers. And again, and I can't let you go by asking you to open the calendar, take a note, and write down the next date. I invite you also on behalf of the Insurance Association of Jamaica to the next ICII 2022. I know that I'm now inviting you to Jamaica for the 3rd time in a row, but cross fingers that pandemic will be over more or less, or at least manageable, so that we can meet and travel again. We'll still work on solutions so that people who can't travel can still participate. uploading the sessions is one thing, uploading all the presentations is also one thing, but we'll do our best to make the conference as accessible as possible. Now again, big thank you, and this is it from my side. Take care, stay safe, stay healthy, and see you all very soon, hopefully. Bye-bye.
Bye-bye.
Thank you.
Thank you, Tarek. Thank you, Miguel.
Thank you. Bye.
Bye-bye.
Bye-bye.
Thank you, Lorenzo. And thanks to the Mint team.